Good afternoon and welcome to BizTech Asian Midday Market Watch. I'm Samantha Voon. It's a Friday, the 16th of August, and let's start by taking a look at the summary of market actions today. Now, Asian stock markets surged following a strong performance on Wall Street overnight. This positive US economic data eased concerns about the potential recession, while the anticipation of future interest rate cuts kept investor sentiments upbeat. Now, US stock indexes experienced significant gains yesterday, driven by robust retail sales figures that bolstered confidence in the US economy. Earlier in the week, a moderation in inflation supported expectation of a 25 basis point rate cut in September, contributing to the overall market optimism. Now, this positive momentum extended into Asian trading, where US stock index futures continues to rise. Over in Japan, the Nikkei 225 is up 2.97%. The stand-up performance in Asia, and the index is on track to post weekly gains of 8%, recovering from its 4 consecutive weeks of sharp declines that pushed them into bear market territory. Now, this rally was supported by stronger than expected GDP data for the second quarter, indicating an economic recovery driven by the rising wages and increased consumer spending. However, despite the recent gains, Japanese stock remain in bear market, with analysts cautioning that the rally has been fueled largely by domestic investors, while foreign investors remain cautious. In Hong Kong, the Hang Seng rose by 1.72%, buoyed by an 8% surge in the shares of JD.com, following the company's better-than-expected earnings for June quarter. Now, Alibaba Group also saw a 3.6% increase in its share price, despite missing earnings estimate, amid speculation that it may upgrade its Hong Kong listing to make it eligible for buying by the mainland Chinese investors later this month, and this will potentially attract significant investment from mainland China. In China, market still lags behind, with the Shanghai Composite up modestly at 0.01%. Now, mixed economic signals from China dampened investors' enthusiasm, despite further pledges of economic stimulus from the PBOC. Now, the central bank is expected to review its benchmark loan prime rate next week, following an unexpected rate cut in July aimed at stimulating growth. Elsewhere in Asia, markets advanced, supported by the reduced likelihood of the US recession, like we mentioned earlier, and the ongoing expectation of an interest rate cut in the US. The Australian ASX rose 1.06%, and the Nifty is up 0.34%. The STI is up 1.09%, and in KL, the KLCI is up 0.03%. Now, that's all I have for market updates. And to give insights, we have Kelvin Wong, Senior Market Analyst at Oanda in Singapore. Kelvin, welcome to the show.
Thank you, Samantha, and happy Friday.
Happy Friday. Always good to see you. Okay, so we had really resilient US retail sales numbers. What is its impact on the global markets in your view, Kelvin?
Yeah, sure. Because since the start of the middle of July, from that particular period onwards, market participants has been pretty much concerned about growth risk over inflation risk. So what we could see yesterday's resilient US retail sales figure for the month of July came in kind of better than expected slightly, which actually reduces the odds of this potential hard landing or recessionary-like scenario in the US. So that being said, over here, if you look at the current Fed Funds futures pricing in terms of the anticipation of the pace of the interest rate cut coming in the September FOMC meeting, as compiled by the CME Fed Watch 2, the probability of a 50 basis point cut has been greatly reduced as of now. So previously, we talked about the data released before the US retail sales. There's a slight chance of 50% chance of a 50 basis point cut. So that actually doesn't really bodes well to the risk assets, because if the Fed were to actually engineer this larger pace of, or say larger momentum of interest rate cut, it actually represents some kind of crack that's really taken shape in the US economy. But given yesterday's, we call it better than expected retail sales, it actually kind of put in a way that release the floodgates for some form of risk on behavior creeping back into the markets again.
Yeah, I think the data really saves the day, yeah. So everything is in a sea of green as we saw earlier. All right, so how about like Singapore? Its export growth was better than expected in July, right? Maybe you can share about that as well.
Sure. So one thing quite surprised to me is over here is that Singapore key export growth, which is NODX, that's the non-oil net exports. So for the month of July, unexpected early, the numbers was very, very rosy. So it jumped by on a year-on-year 12.2%. So that's actually reversing from 0.4% decline in June. And what I could see this number over here is that potentially it may not be a reversal of key reversal of last month decline or even Q2 decline, because if you look at from a Q2 basis, they actually declined by 6.4% annualized. And also the Enterprise Singapore or the trade department of the Singapore government actually kind of reduce its forecast, the year-end forecast of these key exports down slightly from initially 4.6% to 4.5%. And if you dive deeper into the data for this increase in the July NODX figure, is primarily driven by a couple of key markets, which is China. So China actually contributed significantly to this rise in July Singapore NODX. And do not forget, China economic growth are still facing pretty much of a series of headwinds. The risk of a deflationary spiral is still pretty much not totally eradicated. If you look at the July industrial production from China that's out this week, they actually declined below expectation to a 4-month low. And China retail sales continues to remain lackluster. And also given the fact that China policymakers are still pretty much hesitant to engage in kind of a forceful stimulus measures to actually jumpstart consumer confidence and consumer spending in China. So I would say that still pretty much cautious about this one-time blip up jump in Singapore NODX for the month of July.
Okay, so apart from all that you mentioned, is there any key data that we should be looking out for today or maybe later in the week? Anything at all?
Sure. For today, there's two key data to look at. One is actually definitely pertaining to whether are we able to see the substantial risk-on behavior that has taken shape yesterday in the major US stock market, because there will be another key related growth data that market will be particularly very interested to focus on will be the University of Michigan consumer sentiment data. So for the University of Consumer Sentiment data, this is a flash data, a preliminary data for the month of August. So last month July, the data continued to slip down at 6.4. So that was actually the lowest reading in 8 months. And in fact, consumer sentiment as compiled by University of Michigan continues to slip continuously since April. All right, so if this time around the market is actually expecting almost a slight increase to 66.9, just a slight increase. So if the data comes in disappointing, the market expectations, let's say slip down to around 65 or 60 figure, that potentially could see a bit of potential profit taking of given the huge significant intraday rally that was seen on the major US stock indexes yesterday. So something to take note of. And as well as for today, there's actually a public rally by Democrat President nominee Harris. So this time around, during this public rally, during a press conference, she did mention that she actually starts to announce her economic plans for US. So market participants will be paying very close attention to her economic policy, whether does she actually deviate much from her predecessor, which is Biden.
Okay, thank you so much for your insight, Kelvin.
My pleasure.
So this has been BizTech Asian Midday Market Watch. We've been speaking to Kelvin Wong, Senior Market Analyst at Oanda in Singapore. This is be sure to keep informed with the latest market updates weekdays at 1 p.m. I'm Samantha Voon, and this video and podcast will be on our website, www.biztech.asia, and our social media platforms. It will also be on our syndication partners' TV stations, radio stations, and website. Remember to like and subscribe. Thanks for tuning in.